Good afternoon. The Senate is focused on making North Carolina a competitive leader in retaining and attracting jobs, and also in dramatically improving our tax climate for new businesses and for existing businesses. Today, we are filing in the Senate two bills to answer the governor's call for economic development funds while improving the tax climate for all North Carolinians. We're going to start out with a bill that is being primarily sponsored by Senator Rick Gunn of Alamance County. Senator Gunn.
Thank you, Senator. Good afternoon. I'm pleased to stand in front of you today, and you know that I have filed Senate Bill 326. Senate Bill 326 is going to do exactly what the title says. It is going to, for the rest of this biennium till the end of June, it's going to increase the funding for our JDIG program by $5 million. It will expire at the end of the biennium here. Now, why is this important? I'm excited about together collectively this legislature working on a comprehensive economic development bill, but we need a little time to do that. But I also think it's very important, and as you know, Secretary Scavarla has made it clear that there are opportunities out there today for economic development opportunities to recruit some businesses. And I felt that it was very, very important that we give him that tool that he needs between now and the end of the biennium to further spur some economic development and have the funds available to seek some of these companies. So I look forward to the governor and Secretary Scavarla using this money and this opportunity to recruit some additional businesses that are apparently time sensitive between now and the end of June. Thank you.
Oops. Thank you, Rick. Thank you, Rick, for your work on that bill. And as you indicated, it will allow the Commerce Department to continue to recruit. We heard from Secretary Scavarla yesterday that they have basically gone through the funds that were available for this biennium, and this will give us the opportunity to have some time to work on the Senate's version of economic development and to work on a more comprehensive solution to the issue of what do we do in North Carolina in terms of economic development. As you know, the House has sent to us a bill, House Bill, I believe it's 117, and what we are doing today is we are introducing a bill. It should be introduced as we are speaking. Don't have copies now, but they will be available by the end of the press conference. And the bill that we're going to introduce takes a balanced approach to the effort to provide economic development in North Carolina. And so by taking that balanced approach, it deals partially with tax policy and partially with modifications to the existing JDIG program. And so with reference to the tax policy part, it will reduce and simplify corporate taxes by moving to single sales factor in North Carolina. Single sales factor is something that is already available to businesses in South Carolina, Virginia, and other states around the nation. One of the best examples I can give you is we know that our corporate tax rate presently is 5%. South Carolina's corporate tax rate is presently 5%. But South Carolina has single sales factor, which means that businesses that locate in South Carolina that have a lot of employees or that have a significant investment in their payroll will pay a lower amount of taxes in South Carolina even though their rate is the same. And so single sales factor will help us become more competitive. The second thing that will happen or that we have in the bill is to keep the promise that we made in tax reform and provides for reduction of the corporate tax rate from the current 5% to 4% in 2016 and 3% in 2017. That, again, will make North Carolina more competitive in terms of our ability to attract jobs from new businesses, but it will also provide a benefit to those businesses that are currently located in North Carolina. The other part of the bill actually makes some modifications to the JDIG program, and those modifications are several. One of the things that we've heard some concerns about is the imbalance that currently exists in the JDIG awards, an imbalance that over the past 2 years has seen better than 80% of the JDIG grants going to 3 counties. And those counties actually are counties that have an average or a median income of $56,796, whereas the remaining 97 counties in North Carolina have a median income of $40,175. Many members believe that that sort of an imbalance is something that needs to be addressed and corrected. And so the bill that we're introducing will help correct that imbalance by modifying the current JDIG program to limit the total awards that can go to Wake, Mecklenburg, and Durham counties. It will also provide that with reference to JDIG grants, what will happen is that the Commerce Department will be able to award grants under the JDIG program in Tier 1 counties to provide for up to 80% of the state level taxes, and in Tier 2 counties up to 70%, Tier 3 counties up to 60%, and in Wake, Mecklenburg, and Durham counties up to 50%. That should go a long way to address the imbalance that currently exists. The bill also would call for the current JDIG program to be extended for 2 additional years, as opposed to the 4 years of extension that exists in the House version of the bill. In addition to that, we keep hearing a lot about the possibility of a major automotive manufacturer coming to some state in the United States, and in many respects, hopefully to North Carolina. In an effort to make sure that we have an ability to be competitive in the recruitment of such a business, the bill would provide that for any employer that is going to invest $1 billion in new capital investment in North Carolina and create at least 2,500 jobs, that company would be eligible for the Commerce Department to award a JDIG grant to them that would go up to 100% of the state level taxes. That's a new program, and it would the caps on the JDIG program would not apply to an award under that provision of the bill if it becomes law. That is, in essence, what the bill does. It's our belief that this bill would take a balanced approach to the entire issue of economic development in North Carolina by not ignoring those companies that are currently here and providing them with tax relief and providing them with a benefit, but also providing that from a policy standpoint, we want other companies to come into North Carolina, and if they do, we will have a competitive tax climate for them. In addition to that, to the extent that there is a need and the Commerce Department feels that it is appropriate for a JDIG-like grant to be awarded to someone, there are modifications in the existing JDIG program to help ensure that those JDIG grants that ultimately are North Carolina JDIG grants are in many respects shared across the entire state of North Carolina and not limited to just 3 counties in North Carolina. I'll be more than happy to take any questions. Ladies first.
What's the anticipated cost of this to the state? I'm talking about the tax, primarily the
I think the overall cost of this package, if I recall correctly, the governor in his budget had a series of economic development efforts and other credits and benefits that totaled over $1 billion. I think the total cost of this program, even with the tax cuts, will be much less than that. I don't have the exact number. I can get that number for you, but the projection, I believe, will be much less than the governor's proposal. Gary.
In your 2013 tax law, you set revenue goals before you lowered the corporate income tax. I assume those revenue goals are eliminated in this bill?
One of the things that the bill would do is remove the triggers. One of the things we wanted to be sure of in 2013 is that we were very careful in terms of what we were doing with the tax rates in order to ensure that there were no unexpected instances that came up, and so that we would see that we had adequate revenue to cover the needs of the state. As you know, the tax revenues on a year-over-year basis are growing $500 million, $500 million or more. And so it is my belief, and it's the belief of many of us, that there will be adequate revenues to cover those things that we need revenues for in North Carolina. The bill proposes to eliminate the triggers, yes. Yes. We're going to talk about this issue. If you want to talk about other issues, we'll do that in a separate.
Senator, the House bill had a sales tax cap on jet fuel aimed at U.S. Airlines. Is that in, or American Airways now? Is that in your bill at all?
It is not in. It's not in the bill.
Would you support it?
We will have to make a decision as to where we go with that. Again, this bill would represent an alternative to the approach taken by the governor and by the House on the issue of economic development that would be a more balanced approach to deal with the issue of economic development from a tax policy standpoint in addition to modification of the JDIG program standpoint. Mark.
I want to ask one clarification question before it.
I'll give you two.
The single sales factor, the 3% corporate income tax rate in 2017 would be applied to the single sales factor.
Correct.
If you have a company that, for example, didn't sell anything in North Carolina, they would pay no corporate income tax, right?
Correct. If you have no income, you pay no tax.
So what would you say to somebody who says, well, wait a minute, you'll have all corporations paying less and some corporations paying nothing. Why should they not be asked to carry their fair share of the state budget?
Of course, that's a philosophical question as to, one, you get to the question of whether or not corporate taxation is something that merely is a pass-through of some respects, that corporations themselves, if they pay taxes and they pay dividends, then they're double taxed because the dividends are paid, taxes are paid on the dividend income. It is our belief that corporations will still pay a significant amount of taxes, even under this legislation. The taxes that they would continue to pay would include property taxes, would include taxes having to do with unemployment insurance, would obviously include income taxes. Franchise taxes would continue to be paid. There's still a whole host of taxes that are paid by corporations, in addition to employment taxes, other employment taxes that are paid. Was that your second question?
It was, although, the General Assembly's general fund supports things like the court systems where corporations avail themselves of vigorously. It supports other things that corporations use. But again, could you maybe further address that philosophical question of why corporations shouldn't be supporting those things of which they avail themselves?
But Mark, just because we lower the taxes doesn't mean that they're not supporting those things as well. They're still paying taxes. And last time I went to the courthouse and filed an action, it didn't matter whether it was for a corporation or for an individual, there was a filing fee that applied. And when I filed a motion, it didn't matter whether it applied to a corporation or an individual, there was a motion filing fee applied. And so the corporations will still and still do pay a substantial amount.
Given the urgency that's being requested by the governor's administration on JDIG, is it the intention to get Senator Gunn's bill passed within the next week or so and take more time on this larger proposal as you go back and forth with what the House has out there?
Assuming that things go according to plan, that is the hope, that the bill Senator Gunn introduced would be a bill that would provide us with the capacity to deal with the larger economic development issue with a little more time and a little more deliberation. Oh, yes, I'm sorry.
How much would be available for new JDIGs or job roles whenever it's a big call for the following 2 years?
The bill itself would continue funding of the JDIG program at $7.5 million, $15 million per fiscal year, $7.5 million per per half year. The other thing it would do is, and obviously there are a lot of details, and I don't want to get too deep in the weeds on it, but it would provide that over the course of a fiscal year, if the money, the $7.5 million in the first half of the year is not spent, it would roll over to the second half and then go with that. But at the end of the fiscal year, if there were funds left, it would remain in the Treasury.
You heard in Senate Finance yesterday from Secretary Stavarla about single sales factor, and his opinion was that the state can't afford to do that right now, that it would cost somewhere around $180 or $200 million. And while he thinks it's a good idea, there's, in his mind, no way to do that immediately. What's your take on that?
I would say we can't afford not to do it. And I disagree with his calculation of the numbers. Our fiscal staff disagrees that that's the cost of or the revenue loss of going straight to single sales factor. It's much less than that, and as I said, even though our corporate rate is the same as South Carolina's, even if they offer no incentive, a corporation that hires a lot of people and has a lot of capital infrastructure would pay a lower amount of taxes in South Carolina than North Carolina, simply because of single sales factor. And the folks around us are all going to it, and it creates a real problem for us. And that's a problem we can solve that doesn't pick a particular winner or loser. It basically applies evenly across the spectrum for C corporations. Other questions? Jim?
Did you all preview this with the governor's office, and if so, what was their response?
I have provided a copy of a earlier version of the bill. It's been changed a little bit, but not in substance, to the governor's office and to the speaker's office. I'll let them speak for themselves. Mark.
The economic development tool for attracting the big manufacturers, you say it's going to be housed in JDIG. Is the benefit going to be the same?
It'll be administered like a JDIG grant, only the caps will not apply to that particular grant. And Laura, we'll get you the answer as to the relative cost. Okay, we'll get it to all of you. Any other questions on that issue? Okay, thank you.